And we'll see, Diane, if the Dow goes negative, it's only up 12 points. Again, it was up 70 before the release here. Across the rates complex, some pops as well, especially in places like the 2-year. What do you make of that? Diane?
Oh, I think what I'm hearing, I'm sorry. What I'm hearing about this is the Fed is much more hawkish. This is a hawkish Fed. We knew that going into this. And the range of uncertainty, what I think the Fed is really concerned about, and it gets to something that Tyler mentioned at the beginning, the China situation, their zero tolerance policy. How is the collision of supply chain disruptions going to hit us with Omicron, along with what's going on in the balance sheet? And we've got this dissonance in the rest of the world. Is the Fed is a central bank to the world. They want to get on to rate hikes and to dampening inflation now. That's clear. That said, there's spillover effects to the rest of the world, especially developing economies outside of China, where they have to match rate hikes with rate hikes of their own. And that could cause its own destabilization in financial markets. And I think that's something the Fed is very uncertain about when it comes to reducing their balance sheet.
Kim Forrest actually was concerned about that last week when we were talking to her. We don't have Rick Santelli this week, Jason, so I'm going to ask you, now that the 10-year's gone above 1.7%, where does it go from here?
Yeah, that's a really difficult question to answer. If financial markets... If financial markets aren't already difficult enough to predict writ large, interest rates are probably more difficult. So, we're about 5 or 6 basis points away from the cycle high so far, which was about 1.75. I think there's a historical argument to be made that oftentimes the cycle high in the 10-year happens right after the recession ends and as the recovery begins in earnest. So if that plays out again, there's an argument to be made that we're at or near the highs for this cycle, and unless we see a reacceleration of economic growth or a pickup in inflation, not just inflation going sideways or disinflation, but a pickup in inflation, that we may not go much higher on the 10-year. Maybe 2%, I don't know, hard to say, but our view is that rates are going to behave as we get into the middle part of this economic expansion.